In this episode, I'm going to be talking to three of our key contributors of our team. That's Tom, Hannah, and Edward, about what is happening in the market right now, what that means for us, AshdownJones, and what that might mean for you in your market and in your business. So we're going to be talking to Tom, who is our senior valuer, to talk about what he's seeing on the ground. So why he's not seeing people coming to market, what kind of properties are coming to market, what people's pushbacks are and obstacles, and how he's countering that with what he's doing. We're going to be talking to Hannah about what she's talking to people about when they're on the market and not getting any viewings whatsoever, what her retention strategies are, and just what over communicating means and how that can help. And then finally, we have Edward on the sofa, our operations manager. And Edward is going to be going through the numbers and looking back at the last 3 years and seeing how this market is differed from other markets. So, Tom, what are you seeing right now? You're our valuer, as most people would call you. We call you our senior property consultant. What are you seeing in terms of trends and what might have changed in the last few months in the market?
I would say sort of the last few months, I've certainly seen a downward turn in the amount of valuations I've been doing.
Okay, interesting.
Which is sort of been attributed to the same with that side of the viewings as well. They have gone down quite a bit as well. I think that's sort of adheres to sort of what happened with the stamp duty at the end of March.
Do people mention stamp duty in the valuations?
No, not really, not when they're selling, but I think probably more at the sort of end of last year, a lot of people were saying, oh, we want to try and get on to beat that cut off, but now less so.
Yeah, because now there's no urgency, is there?
No, exactly, and a lot more people now, I think, where the market is and the uncertainty around it, that a lot more people are wanting to know the value of their home. The landscape's changed a lot in the last sort of couple of years, so a lot more people want to know where they sort of sit financially, what they've got for the future, especially. But I'd also say the value point of the homes I'm going to see is not as high as it used to be.
Okay, interesting.
Compared to last year, I'd say last year majority would be $1 million plus. A lot more. I'd say the majority now are under that. Okay. I'm going to see.
And just for clarification, for those of you who are listening, we are still sending out the same number of letters to the same homes. So if a high value home is on the market, they're going to get 16 letters a year from us, which is a monthly on the market and then a quarterly not on market, which is also what we give to our masterminders as well. And we're still sending out 1,250 a month, but we're getting less valuations from it. So the response rate has dropped. Is that what we're saying?
Yeah, definitely. I think the quantity of people reaching out from the letter, especially you would see that wave of when the letter went out, a lot more calls would come in. Even the ones you do with, on the market and the profile that we do, they've certainly dropped off.
What's the profile letter?
Profile is where Abby and I have a system where we've target areas in certain parts of the lake. So, for example, say Keswick, Windermere area in particular, and say I'm going to be in the area that particular week. Reach out to people to say I can come out and see them.
So it's a valuation week letter, isn't it?
Exactly, yeah. It had really good success at the beginning, but the last 2 or 3 we've done haven't had as good a response rate as we would have liked.
Well, I know 3 ago, so not the last 2, but the one before that, I think we sent out 800 letters and got 20 valuations from it. Does that sound about right?
Yeah.
Instruction rate from that, the conversion isn't as high, it's fair to say, isn't it? Because they are sort of, we're in your area, we can give you a valuation anyway, even if you're not thinking of selling. So it's very it's a soft touch, isn't it? But it's nice to get into those homes, right? So what's your KPI for number of valuations on a weekly or monthly basis?
It varies depending on week because we're based on the sort of last few years of instructions. But for example, at the minute, the monthly target is lower than last month, but the weekly target on average is 2 or 3 a week.
Okay. And is that instructions or valuations?
Instructions.
Instructions. So how many valuations would you need to get, say, 3 instructions a week?
I'd say where the market is, the minute the ones are going on, you need a good 7 or 8 plus at least.
I was going to say 10 actually, because there's a lot of people who are just scoping out the value, aren't there? And they're not intentional. Whereas when the market's been a little bit quieter, a little bit more buoyant, then we've been out to more intentional sellers. I think it's fair to say that a lot of people now know that the market's not great, and it took the general public quite a while to cotton on to that. I spoke to somebody yesterday who hasn't sold their house for 10 years. You spoke to her as well, didn't you? And she said that the market is absolutely rubbish at the moment. How does she know that? Where's she getting that information from? Is she seeing, loads of sale signs and no sold signs, or is she listening to the media? I don't know. But I think in general, it seems to me that everything is quieter. So we're quieter on viewings, valuations, and instructions. Is that true?
Yeah, definitely. That sort of goes hand in hand, like you say, with sort of how the market looks. And when I go out, I'm very upfront with people. And I think the ones that sometimes you do get where they say, "I'm not looking to sell, I'm not going to go on the market," but I think sometimes they like that. We are upfront and say, they actually go, "Well, actually, if the market's like this, and I do know in the next 6 months to a year that I do want to sell, maybe it's better to get on now and just play the long game than wait for it to pick up when, the minute we don't quite know when that's going to be."
Yeah, we've also, I think Phil's sort of approach with this, with the on the market letter, is be ready for when it turns, because we have got a stock surplus at the moment in our area. We seem to have in many areas across the country. Me and Phil talk to agents all over the country, and they're saying that in most pockets, I would say probably anything north of Birmingham is very quiet. Anything south of Birmingham is starting to pick up, which is hopefully our bellwether for when we get it.
Yeah.
I spoke to a lovely agent, if you listen to this, Rob, down in Devon, and he said that he sold 35 houses every month for 3 months on the trot.
Wow.
Which is pretty significant. I think he said they were the best ever 3 months he'd had. So if that is a bellwether for us, then we're in for a good market. And it can't ever stay very quiet or very busy. We know this from many, many years of data. It creates a vacuum, an economic vacuum, market vacuum that then comes back. It's difficult while this is happening, and our approach to it is just keep doing the things that we do well. And that's basically what we're doing to make sure that you've got enough valuations. But when you follow up with these people and say, what do you think of the valuation, and what would you like to do next? What are people saying at that point?
A lot of people are sort of very upfront when I go and see them, and usually that follow-up call is to have a chat about the value, which majority of the time people are happy with, and they say, "Oh, it's given us something to consider," or they thought it's where they thought it was going to be, so they're sort of planning ahead. You do get the odd one where they go, I think especially anyone who's sort of not sold in the last 10, 20 years, they will be like, "It's worth more than I thought. Maybe I might consider doing something now." But a lot of the time, it's just about keeping that conversation going and saying, I'd check in with you in a couple of months' time. What I'm going on today, I've been speaking to him for nearly a year.
Right,
and he's got to the point, he's gone, "I'm ready to sell.
Okay.
I know the market's not great, but I appreciate you kept in touch, and I sort of want to start that process."
Okay. Well, good luck with that, and thanks
Thank
very
you.
much for having a chat with us.
Oh, my pleasure.
Next on the sofa, we have Hannah. Hi, Hannah.
Hi, Sam.
What's your role here, AJ?
I feel like my title changes a lot, but it's Senior Sales Manager.
Title changes, job stays the same.
Yes.
And how
Yeah.
long have you been here now?
9 years.
8 years.
9 years in December. Is it not?
I think it's 8 years in December. We've been open 8 years now. So you started.
sure?
You started in December 2017.
8 years.
And it's 2025.
Yeah.
And if my maths is correct, that's 8 years.
Yeah, you are correct.
You're one of the. In fact, you are the OG now.
I am.
There was a couple of OGs before you, but now you are actually the OG.
I am.
So OG Hannah.
Yeah, it's been fun.
So you've seen masses of changes over the last 8 years in the market. And I think when we started looking back, it's probably fair to say that was a normal market, as normal as you can get. Like we were struggling to get 30 properties on the market before they sold.
Yeah.
So it was relatively buoyant. We were getting out to, decent number of vals a week, maybe 2 or 3. Our instruction rate was probably about 80%, I would say, conversion. And we were ticking over nicely. So for the first 3 years, I think we managed to get up to about 400 turnover, something like that. And then COVID happened and it all went mad.
Yeah, not
And
enough
then-
stock, and the demand was crazy.
Yes, and we were seriously worried about cash flow, if you remember, in those days, because we couldn't get the stock, so therefore we couldn't make the sales. And cash flow was really tight. And then it just went bananas.
Yeah.
And everybody who had been reading the headlines for the last year or so suddenly decided to put the house on the market at the same time. And we just had the best year ever.
Yeah.
I think we pretty much doubled our turnover that year. And then, of course, it can never stay like that, can it? So the 2021-2022 market bounced, reversed, I should say, and went into the 2023 market, which was really, really tough for us. Now, we thought we'd climb back out in that market in 2024 because 2024 was quite a good year for us. But now in 2025, it's been a really odd year.
Yeah,
hasn't it?
has. Yeah, so last year it started really slow. And then I think once the budget came out, we had a really good last quarter that then carried us through to Q1 this year. And we thought, or we saw the people's driving force was to complete for April before more changes happened.
Yeah,
this
before
year,
stamp duty and etc.
and council tax and second home and all of that. And then since Easter, really, it's been really slow, but extremely busy for instructions and homes coming to market. But we've just not caught up in sales, and we keep saying it's going to happen. And now I'm telling clients it's going to happen in September.
Me too.
Everyone wants to be in for Christmas, and they're more like actively, seriously looking then. And I hope it does, because that's what I keep telling people. But I just don't know. It's odd.
It's an odd market this year.
Yeah.
It's probably one of the oddest we've had, I would say. Everything else has been, over the last few years, even though we've had really bad markets, really good markets, have been relatively predictable.
Yeah.
They've been in waves, haven't they? It's been really, really good for a year and a half, and then it's been pretty tight for a year and a half. Now we seem to have 1 month amazing, 1 month awful.
Yeah.
And we've had so many fall throughs.
This week alone, 3, and we always said 1 in 3 fall through, but we haven't had that amount.
And they're not
for a long
reselling,
time.
are they?
They're not, no.
Because we used to have a bit of a waiting list for the one that had fallen through, and therefore we could resell it really quickly.
Yeah.
But actually, that's not even happening now.
No, we have a thing called notifying buyers, and normally there is, backups there, and we've gone back to these people that have, maybe inquired while it's been under offer, but they've either stopped looking or they found somewhere, and they're just back on the market. Or some clients have said, we're going on hold, we're going to wait for the market to catch up before we relist.
And the trouble is, I suppose, it's a bit of a catch-22, because if too many people do that, we don't have a buoyant market.
No.
And actually, even you telling people that you expect to pick up in September, that can then inject some positivity and confidence into the market. So you saying that might make them make different decisions, put it on the market, go and buy a house, and then the market starts moving.
Yeah.
The market seems to have just ground to a halt, where we've got buyers and sellers, but nobody's actually doing anything.
No.
It's crazy.
We've got a lady viewing today and tomorrow and Monday, 10 of our homes. She's just called up and she said, right, I'm in rented. And we haven't had that. We used to have that quite often, where we'd spend a day with a buyer and show them loads of ours. So there is movement. It's all under the million.
Right.
That seems to be where it's moving a little bit. But
I think people as well have got so much choice. I wonder if they're getting a bit of choice inertia, where there's just
Possibly.
too much to look at.
Yeah.
I mean, we ourselves have got over 70 houses.
we've got 97 on the market. And
Fully available.
25 coming.
That is crazy, Hannah. I didn't know it was 97.
Yeah.
We're almost at 100 houses.
I know.
We never thought we'd get to... Remember when we used to have 50 as our goal back in about 2021?
Yeah.
And we just couldn't get there.
Yeah.
And I think at the lowest ever, it dropped down to 6.
It did in January. We put some on Boxing Day, and they all basically went. By January, we were like, we have 6 houses. And what were we doing?
Fun times.
What was I doing?
I don't know.
Yeah.
Don't know. So, and we've got 2 new people just started, haven't we? Lucy and Sean. Obviously, they've never seen any market before. So this to them is going to look absolutely normal. But to have the same number of viewings we had last year and the year before, but with 3 times as many houses. 3 times as many houses from 2 years ago, and probably twice as many houses from a year ago, I would say.
Yeah.
So the viewings per property ratio has massively plummeted.
Yeah.
So if somebody's listening to this and they're in the same position as us, got loads of hot properties on the market, their biggest challenge is going to be retaining clients, keeping them happy, which is what your biggest challenge is, isn't it?
Yeah.
What's your advice to them? What are you doing that they could do?
Just over communicate, get all those different touch points in with clients, because they're getting frustrated and they can see and feel it too. So it's just I go around and just have a couple with them and just say, it's normal, you're not alone. And that gives them that reassurance. I redo photos that maybe you were taken in a different season because they've been sat on for a little while. More social campaigns we're doing. It's just communication.
No news is news, right?
Yeah, that's all we can do at the minute.
It's hard as well when you've got a property on the market that hasn't had a viewing for 6 months. It's hard to pick up the phone to them, isn't it?
Yeah.
And remember that no news is news, because you feel like you're being held to account for this lack of viewings.
Yeah.
What do you say to them in those calls?
I agree. I said it is frustrating and it is a shame we haven't sold and we haven't had, the flow of interest we hoped for, but this is what we're doing. And I talk them through the different strategies and the things we do behind the scenes. I say we match make where we can. And I say, look, next time we'll have a conversation. I just make sure that call to action's booked in so they know. I've WhatsApps with all my clients now, with their families and our team. And
God, that must be exhausting.
Yeah. I can't even get to my own family's WhatsApps lately.
You need a second phone, don't you?
Yeah.
What's your prediction?
I am feeling positive because we've been here before and we've had these conversations. We just haven't had this amount of stock. And it's slightly concerning because we've got a new team. So their norm at the minute is to have loads of houses on the market and not have sales. So it's hard to do the training on. You did negotiating with them yesterday, so it'll be exciting to go through that. But I do think it will pick up. I do, because as new stock's coming on, that's where we're getting the viewings.
Ah, interesting.
So anything new, so we've just put one on called, can I? Yeah, Brunton House. And we had 10 calls within the first 2 hours when it went live.
That's good.
So, and that's under $1 million.
Well, how much is that one?
775.
And what do you think it is? Is it about Brunton House that is catching people's attention when we've got another 96 houses that aren't?
It's priced really like, it's not bold on price. It's a good price, and the location, it's in Bowness.
Right.
The marketing looked lovely, as do all of ours, but it's that price point. It's an upgrade for maybe a local that can afford it, or people looking out of area as well as a second home.
So we're not going to do anything different to attract those valuations. But what Tom was saying was that he's getting the responses from the letters are coming in below $1 million.
Yeah.
And so are the conversions. So actually that is probably a good thing, given that seems to be what we're selling.
Yeah.
And it's, I don't know, it's difficult when you look at a £3 million home with a 45k fee and you see it in cash flow and you think this could be all or nothing. I remember in July, well, it is July, isn't it, as we record this, and we said we were going to have 8 completions this month, and then it's or none.
I know.
That's the trouble, isn't it? It's such a crazy industry to be in.
Yeah.
That we can be at this stage and, cash flow be an issue. But if you think about all those properties are on the market, 97 properties, plus we've got a lot on hold, haven't we? And
we do.
A lot that are, not, what do we call it? They're
off-market.
Off-market homes. And a lot of those have had photography and brochures, etc. So we probably have, and each property takes about £1,200 to take it to market. So we've got, I don't know, well in excess of £120,000 there tied up in stock, just in marketing costs.
Yeah.
So we need this to start clearing. And that's why I think the cash flow feels so tight, because we've paid for all those properties to go on the market and then they haven't sold.
Yeah, and we've lost some big ones.
We have
in
lost
sales. So
a couple of really big ones.
I am feeling positive. We have some amazing homes coming to market and they are under that price bracket. But the middle, so anything between $1 million and 2 is quiet. 1.5 seems to not get anything, any home between 1.5.
Really?
Yeah. But then the higher stuff, I've just had 4 inquiries for a secret listing that's on.
Is that the one at
7.5 million?
Yeah.
So we're just trying to get those converted into viewings. I'm answering questions. And then another coming soon listing I've put on Rightmove at 5 million. That's had 3 inquiries. So if we can get the higher end stuff moving, at least on sale, that would massively
a couple
help.
of big ones, yeah.
But it's that middle that's slow.
I think this is what happens though, isn't it? When there's a lack of market confidence, the bottom carries on moving.
Yeah.
And the bottom, for anybody who's listening who doesn't sell high value, maybe you sell under 500,000, the bottom for you might be 150, 200,000. But at least that supports the rest of the market.
Yeah.
it means that should carry through, shouldn't it?
Yeah.
Whereas in the past, when we've had a buoyant market, everything is sold at every price point. Do you think the person that's buying at 750 is different from the person at 1.5? Is it a different personality? Yeah. What's their circumstances? What's the difference in them, would you say?
The middle is out of area, looking either for a second home or relocating to live here, or maybe have and retire here. We're not seeing many second home buyers, really. Their families, lots of Yorkshire people actually have called and wanting to move this way, down south and things. So
that's interesting, because if they're not looking for second homes, that to me speaks of like a tightening in the market.
Yeah.
Because the ones at the bottom, under $1 million, they're probably having to sell to buy.
Yeah.
But what we're saying is that the people who don't have to sell to buy are just tightening their belts a little bit.
Yeah.
So maybe they're feeling the pinch somewhere. And maybe actually the costs of a second home now are too high, because if you don't know this and you're not in an area with second homes and holiday cottages, the law's been changed so that a holiday cottage or a second home used to be able to be categorised as a business, so you could pay rates instead of council tax, which would save probably a good few £1,000s a year.
Yeah.
Like upwards of £300 a month. There was some more legislation coming in, wasn't there, about the licensing for second homes as well, or for holiday lets rather. So the new laws coming in are the same as Scotland and I believe Wales, which is that if a house isn't already a letting holiday cottage, so in other words, it has if it doesn't already have a proof that it's been let out for, I think it's like 20 weeks over the last 52, then you have to apply for a license through the planning process. And at the moment, they're saying they're not granting any more of those because we are saturated. In fact, I was just talking to one of our local holiday let companies yesterday, and she said that they've got massive holes in their bookings for summer for the larger homes. So anything that should be fully booked for July and August weekends, it's just not. And they've got big gaps in their bookings. You've got a little flat, haven't you, in Windermere that you let out?
Yeah.
Is that fully booked?
It is fully booked, but it's only because I've allowed a dog now.
Oh, really?
So, but the demographic has changed. They're shorter stay, so I've reduced it to 2 nights, whereas before it was always 3 nights minimum.
Oh, okay.
And they're just younger couples. They're not families. And I have other holiday lets I look after, and the bigger ones, have slowed down because people can't afford to go away and spend £500 a night, or they'd rather go abroad.
Well, the cost of living crisis was supposed to be like 3 years ago. But it seems to me that maybe people didn't change what they did then, but now they're feeling the pinch a little bit.
Yeah.
I don't know. It's a guess, really, because we don't know why people aren't buying.
No.
I think ultimately it comes down to confidence.
Yeah.
Because it's the confidence in that person that they're doing the right thing. So if they have any wobbles at all, that's where you're going to see it.
Yeah.
In, taking a holiday cottage on or buying a second home, that's where the wobbles are going to be. But people can justify much more moving to a house that they're actually going to live in. It doesn't feel like an extravagance anymore.
Yeah, there's emotion behind that then, isn't it, really?
Yeah. Interesting. Let us know what you think about what the market's doing for you, and whether you agree with Hannah and what you're saying to your clients who are feeling a bit of frustration and not getting any viewings. We'd love to hear from you. Thanks, Hannah.
Thank you.
So now we have Edward on the sofa. Hello, Edward.
Hello, Sam.
You're the numbers guy here, it's fair to say. Operations manager for the group.
Yep.
And the group is Mastermind Cosmo, the property portfolio that we're building.
Yeah.
Which you're doing a lot of work on.
Lots of work.
Taking a lot of time. And then lastly, but not leastly, AshdownJones.
Yes.
So looking at the numbers, and you very kindly pulled some numbers together for me, what are your headline thoughts about those numbers over the last 3 years? We're looking at 23, 24 and 25.
Yeah. So I think from looking at the numbers, it's what we tend to say, it's very hard to predict being an estate agent. We often mention about waves and riding the wave. But from looking at the numbers, it's quite hard to see trends. Trends change because there's so many, isn't there, external factors, I think, to what can impact the market. So there are elements of the numbers which stand out, but you couldn't just say, right, July's always great for sales or instructions, and May's always great for X, Y, and Z.
We used to say that October was always a really good month. It'd be interesting to see what this October is and whether that is a bit of a trend for the last 8 years, whether we can look at every October and say, I remember Phil saying in like year 3, October's been the best month we've had since we opened. And then he said it the next October and then the next October. So I'm really hoping it's a self-fulfilling prophecy.
Fingers crossed. Yeah. I mean, we do have like spikes. Like we always know January is really good for viewings because we do what we call our Boxing Day launch. So we do get spikes, and you can sort of use certain tactics to increase and improve numbers. But it's very hard to predict.
Well, I was just saying to Hannah as well that when we look at the last few years, when we went through the mad times of the COVID dip, first of all, where we didn't obviously get any interest and no properties coming to market, because we're actually in lockdown. But even after that as well, and then it just went mad, didn't it?
Crazy.
Remember when you came back on the Tuesday? We told you on the Monday night that you need to start back on the Tuesday morning, I think it was, after the first lockdown, and you had 26 viewings in 4 days.
Yeah, it was mad.
It was completely crazy, which some of you might think that's not a lot, but for us, that was a huge amount.
At the time, yeah, massive. And then I remember going down to having 3 homes available.
6, I've got on my
6?
numbers, yeah.
I thought it went to 3, but it was low.
It was ridiculous. And I was really worried about cash flow because I thought we cannot survive with only 6 fully available homes, even though we had so many going through.
Yeah.
It'd be good to look at our pipe as well the last few years and see what that's done, and listed fees. Listed fees at the moment are just ridiculous. What are they, like 1.3 million?
1.5 it's gone up to now.
Oh, God.
With an average fee of 20k, I think.
Yeah, it is crazy.
So, it is crazy.
So what I was going to say was that we had like a good 18 months of the bad market, a good 18 months of the good market, and now we seem to have an all over market. Like we had a really good March, I think, didn't we?
Yeah. It is all over. But again, it's those external factors. We were even saying the other day, weren't we, how Easter can impact, viewing
like where
numbers
Easter falls.
Yeah, where Easter falls.
Yeah.
So it was different this year to last year.
And then Easter weather. Well, actually weather in general. Yeah. If it's too hot in the lakes, our roads are absolutely rammed and you can't get anywhere.
Yeah.
Like even get to Ambleside, which is 5 miles away, can take you half an hour, 45 minutes. And I think that a savvy buyer doesn't want to, I don't know, argue with the traffic, for those few days when they're doing viewings. But then when it's really, really rainy, they don't seem to remember that their dream is to live in the lakes.
Yeah, where it rains a lot. Yeah, it's true.
So Hannah was saying that where she's getting the interest is the under $1 million and people who are actually moving. So the people who are selling to buy. Okay. Whereas where it's really quiet is in the sort of discretionary second home holiday let market, where they're saying 1.5, well, we don't need to buy now, so we'll just hang on.
Right. But I wonder what they're hanging on for.
They're hanging on for a better market, I think. But to them, really, if they're buying, this is the better market. This is the lowest it's going to be. I mean, Rightmove just yesterday, I think, slashed its forecast from 4% this year to 2%. In fact, even Hannah said, are we heading into recession?
She did, didn't she?
Yeah, which I don't believe we are.
No, I don't think we are either.
And there's obviously there is a technicality to being in recession. I think it's a drop in GDP for 2 quarters in a row. I think that's what it is. But we're not in that situation. I think why it feels so painful to us is because we've got 97 homes on the market. We've probably got well in excess of £120,000 tied up in marketing for those homes, and the rest probably because we've got a lot of on hold. And we're not seeing the viewings that much stock should produce. So the viewings we're just looking at now, the viewings have actually remained relatively consistent for the last 3 years or for this time of year. But we've got 3 times the amount of stock.
Yeah, it's not going in, what's the word, in sync, is it? With stock levels.
And we're not getting the offers.
No, we're not.
Hannah's just saying that she's showing somebody 10 houses today. Well, that's what it used to be like when we had an overstock. Yeah. When people have got so much choice that they feel like they have to look at lots of properties. When things are moving fast, people put in offers and they stick because they're worried about losing out, aren't they?
Yeah. Whereas now they've got too much option, too many things to think about.
Yeah. Loads of properties sticking on the market, so there's no urgency at all.
Correct, yeah. Loads of chance to change their mind, see something better. Because that's the other thing, we've not put the numbers here, but fall through rate is gone up as well.
We were just saying that, yeah. And they're not reselling either, which is my worry. So I don't mind a third fall through rate if we've got a resale opportunity, but when we haven't got a resale, then it is actually just out of cash flow. We've lost, I think, 3 this week, haven't we? A timber frame, an annoying neighbour, and a personal circumstances.
Yeah.
So annoying.
But interestingly, from numbers, instructions have actually stayed very consistent.
That's weird,
year
isn't it?
on year.
Yeah, so June 2023, we had 13 instructions. 2024, 13. 2025, 14. That's extraordinarily...
Bang on, isn't it?
Yeah,
the same, yeah.
similar. And yet the valuations, so for 2023, we only needed 24 valuations to get those 13 instructions, which is 54%. In 2024, this is June, we needed 39 valuations to get 13 instructions, which is 33%. And in fairness, I think that's when Tom was doing the majority of the valuations and not Phil.
Yeah.
And then in 2025, in this June just gone, we've had to do 47 valuations to get 14 instructions, which is only a 30% conversion.
Yeah, it's nearly double on 2023 to get the same number.
Crazy.
Or
Now-
is it that more are just from chatting with Tom, just sort of tire kickers?
That's what I was going to say. I was going to say that we've done a few valuation weeks letters this year, haven't we? To get the more valuations, thinking that the instructions will follow, but they haven't actually followed. So we've had lots more instructions, but they're from people who are just on spec. They're they're hanging on.
Yeah.
They're not actually, so we're not losing them. They're just not coming to market.
No, and hopefully in the long run, but I think it's going to be really in the long run. Like we're talking like next year, maybe even the year after, that they'd come back to us to instruct.
Well, that's what Phil always talked about in the when it last did this. We had an overstock and sales. He said you need to bank these instructions for the future to make sure that you carry on talking to them. So Tom's just gone out to one today in Coniston that he's been talking to for over a year. So he's already had a valuation a year ago, and this guy is ready to come to market now. And I also had somebody come into the office yesterday who said they haven't sold for 10 years, I think. And she said, I know the market's really bad, so we don't want it to hang around. We want to price realistically. Where's she getting that information from?
Friends.
Yeah.
You know, so many people, don't they still say, oh, my friend sold, or they experienced this, or still lots of people I know Hannah gets, you know, people referring to the COVID market or post-COVID market.
That's mad, isn't it?
And, you know, you're talking years ago now, but yeah, I think people do get hyped up by friends, family, neighbours on what
The
to
experts.
expect. Yeah, who think they are the expert.
I don't watch the news, as you know, or listen to it even. What is the media saying about the market? Do you ever hear the media mention them?
I'm like you, I don't.
Okay, we don't
watch
know.
the news.
We don't know. You're going to have to tell us.
Scaremongering.
Yeah, I don't like it. Can't affect it anyway.
But I mean, normally I'd like to use numbers to predict, but it's getting harder and harder. Mm-hmm. And even when you think you've got a prediction or an idea, say on completions, we thought we were going to get, say, 6, 7 this month.
8 we had in the forecast.
And then due to various different circumstances, they've all pushed back into August.
Yeah, so that's what I said to Hannah. We were due to have 8 completions or 0 completions. What other market, what other industry could say that? We're going to have 8 car sales this month or none?
Yeah.
You know, it's so mad, isn't it? It's so crazy. Yeah. And the trouble is, every time they push back, there's a danger we're going to lose it, either on a retention basis or because, the sale falls through because people just wait too long.
Yeah, definitely. Makes cash flow forecasting very tricky.
Well, you do our cash flow forecast daily, don't you?
I do. Yeah, well, I check it every day.
Yeah, so we have to, don't we? Because things change every day.
Should, because of this situation. You know,
would it shock you to know that, well, I know it wouldn't shock you to know that most people don't do it, but the ones who do put a cash flow forecast together and monitor it are monitoring it monthly.
Wow, really? So we're seeing, like even this week, how it can change just within a day, a couple of days. You know, particularly say you've got a flurry of instructions in 1 week, or like you say, you've got all that marketing cost up front, you know, for potentially that week or the coming weeks, but then no income for 12 to 14 weeks at best.
It's crazy, isn't it?
So, if you're not doing it now, check cash flow daily or regularly, weekly.
Well, daily. Well, or when something changes.
Yeah.
If you get a fall through, take it out. If it looks wobbly, take it out. If you've got a really big one, don't put it in to start with.
Yeah, we've learnt our lesson with that one.
We definitely have.
Go on worst case scenario, definitely.
So we're looking at cash flow now, and our horizon is as long as, it must be beyond Christmas probably for
18 months,
Yeah. And we know that we're safe until probably about the end of November, I think. If everything, well, is that still a third fall through rate, or is that?
No, that's based on
actually,
everything.
You can't really add that in, can you? You can't really take a third out. No. So we do, as soon as it looks wobbly, we take it straight out. But even that, we're on July now, August, September, October, November. That's only 4 months. That's tight, isn't it?
It is tight.
And we have money tied up in assets, like properties, and we've got some cash, but we need to be doing something now.
Yeah.
If it's only 4 months to mitigate it a bit.
Yeah. So I know Hannah's doing lots of price adjustments and different strategies for sales, and Tom's doing more letters to get more vowels and more instructions and more stock. But you've still got that challenge that great, getting lots more instructions, but then you've got, again, a lot more upfront fee to pay for. So it is all about sales at the moment, which I know Hannah is focused on, and the team. So fingers crossed.
We have also had a bit of a cost cutting this year, haven't we? You've done really well with that.
Audit.
What's when you did your financial audit, because this is your baby, what have you saved so far on an annual basis?
We're up to about 25,000.
I thought it was more because I thought you'd save 20 on your own.
Well, we did, but then we've had a bit of a challenge with the brochure printing,
Right, okay.
which would have been a big saving.
Right.
But we're certainly over 25. I'm hoping we'll get up to about 40 in the long run with copywriting and other bits and pieces.
Yeah. So that's a good, at least £500 a week that we're saving, which is incredible, really, to put back into
definitely
the pot.
Another
again.
good thing to do. I think for any company that's been going, a couple of years, I'd say it's worth doing.
That definitely thing is.
Every
I think
year.
even at the outset, because you sign up to a lot of things, people tell you to sign up and you don't need it. I did a podcast episode yesterday on your first year in agency, and that's one of the things I said. Don't just sign up willy-nilly. You don't need a fancy website. You don't even need a fancy car. You don't need anything that you think positions you. You actually just need to just do the work.
Yeah. And I think in early days, you're trialing different bits of software and different platforms, and you might forget that you've signed up to this, that, and whatever. So, yeah, it's worth doing an audit and checking what previously you have signed up for that you now don't use.
Well, I remember you saying that on the pool cars, we still had an ex-member of staff on the pool car insurance, but because she was under 25, it was pushing our insurance up, so we just took her off.
Yeah.
Whereas normally you'd think, well, it doesn't matter whether she's on or off because it's pool insurance, but actually...
And I think that was like £50 a month.
Yeah, it's a lot, isn't it?
It's crazy, yeah. So yeah, it's well worth doing.
Yeah.
But I mean, back to the numbers, you mentioned... you were chatting to an agent down south, weren't you? And their sales and viewing numbers have gone up. And we've always seen historically that we kind of follow suit, don't we? The down
Exactly
south
right,
agents. And we have seen this week an uptake on viewings. So I'm hopeful.
Well, Hannah said that Brunton, the new house that's just come on the market, has had 10 viewing requests.
Oh, wow.
Which is really good.
Yeah, really good.
She's also said that on the secret listing we've got 7.5. She's also had 4 inquiries that she's trying to convert to viewings, and I think we had got 2 viewings on that as well as that. So yeah, I can see some positive signs in the market, but coming into a dry July, August is always a worry because it's going to be quiet anyway.
Yeah.
It's just hard to keep your confidence that September, October is going to get better. The other thing I was going to say about if let's say we've got 100 properties on the market and they're all over, I don't know, I think 400 is probably our lowest, something like that. I think we must have 60 over 1 million, maybe 70 at least.
Yeah, I think so.
Something like
Maybe
that. So let's say
50,
2/3 is over 1 million. That means that if you look at the stock in our area in general, we've probably got, I don't know, at least a third, if not a half, of the over 1 million stock.
Oh, yeah, definitely.
So when any over 1 million property sells,
We're going to get it.
we've got a really good chance it's ours.
Yeah.
And that's the point of the stock. So some of you might be thinking, I'm going to tighten my belts. I'm not going to take as many properties to market. That is actually the opposite of what you need to be doing. Although it's painful in the short term, you've got to be a listing machine because you bank those instructions. They are yours when the market turns.
Which it will. And we've always seen that. It will turn. I mean, I'm hoping it's August.
Well, you're a bit more hopeful than I am. I'm thinking September and Hannah's thinking October, I think. So, yes, I'm sure it will turn in the next few months. And it might be a slow grind because there's still a lot of economic uncertainty. I do think that things like, because we've got very high value home or very, high net worth individuals that are our buyers and sellers, and they must be affected by the wider economic market overseas. The Trump market, the Chinese export market. Those are all going to affect our high net worths because of their shares. I mean, we were talking about this the other day. Tesla shares, which I've got, have dropped by something like 60 odd %.
Gosh, is that how much?
Yeah, so
But
it's
that's
huge.
all Trump, isn't it? I think?
That's Trump, and I've got some shares in a sportswear company that does Hoka shoes,
Right.
which I thought was a really good buy, and they have dropped by about 52% because, again, of the import-export duties and all the tariffs. So if somebody has a big chunk of cash in stocks and shares and they're relying on those for income, whether that's pension or just, regular investment income, then they'll have seen a real drop in that income over the last 6 months. So I think that, in fact, Phil's dad is a day trader. So he trades actively. You know, that's his job. And he's not trading at all now until
Has he
Trump
not?
has settled down and stops, you know, imposing tariffs and changing the rules.
So again, everyone's going to put the brakes, aren't they, on buying large assets
Yeah.
like houses? So,
Of course they are, yeah.
well, let's hope Trump stops messing
About. I know. And we've had a bit of good news with things like mortgage rates have come down recently, interest rates are on hold. So the signs are positive for our economy.
Yeah.
And I think we just need to just hang on in there and carry on listing.
We do.
I'm never worried. Phil gets worried before me. And it's funny because the other day I said to him, are you worried that I'm not worried? He goes, Sam, when you worry, I am going to be really worried.
Although I don't think I've ever seen that in 7 years of working with you. So probably won't happen. But yeah, it can be a worry. But I 100% think you're right. I think find a way to keep listing, get the instructions, because we've literally seen it, you know, after that COVID market. You know, you need the stock and then you'll get the wins. So,
Stock is everything,
yeah,
absolutely everything.
definitely.
Yeah. And it's hard to pay for 1,250 letters a month, and it's hard to pay for however many, what have we got, 13 instructions a month. That's a good,
Yeah.
26K,
15,
maybe? 16K, yeah,
easily.
going out. And then it's the staff to make sure we can take all those properties to market.
Cars and rent.
Yeah.
But
a lot, isn't it?
find a way.
Find
Whether it's
a
an
way.
overdraft or a loan or anything. 'Cause
Just get through it.
Yeah, it'll be worth it in the long run.
It will.
Yeah.
Wise words. Thanks, Edward.
You're welcome.
But I hope you found this episode interesting. I certainly did. It's really good to hear it from the people on the ground. You know, Edward is looking at the cash flow every day. Tom is out and about in people's homes, you know, listening to why they don't want to come to market or what their fears are. And Hannah is coping with not just 97 properties on the market and all those frustrated sellers, but also maybe 30, 40, 50 on holds or coming to markets as well. And so they're a really good barometer, aren't they, of what's happening in the market. We'd also really love to hear from you about what's happening in your market right now. So are you seeing buoyancy? Are you seeing optimism? We're obviously in Windermere in the north of England, and I'm recording this in July. If you're listening to this in August, September, and you're in the south of England, what's your market doing right now? It's super helpful to share this information. Certainly it gives us confidence. If we've got somebody in the south telling us that the market is great, then we know that you are a bellwether for us. If it's a nationwide drought in viewings and buyers, then we should all maybe be a little bit more worried and maybe start to deploy some extra tactics. But please do let us know. Send me an email, sam@ajmastermind.co.uk, or book a call in with me in the call link on the show notes. But really, really interesting to record this episode, and I hope you enjoyed listening to it.